Welcome back to Intrendias. Today we're going to look at and build an EMA approached algorithmic trading in Python, exponential moving average. To start off the video, we're going to type in some import lines. We're going to use yfinance, which is a open source library that leverages the Yahoo Finance APIs. And we're going to import some popular libraries here like pandas. We're going to import Matplotlib .py plot as PLT. And finally, we're also going to do some date math here. So we're going to need from date time, import time delta. We're going to use date time and date as well. So now that we have all that, we're going to first create a custom Yahoo Finance get data function in Python. So to start off, we're going to need to define and give this function a name. So I'm going to call it get Yahoo Finance data with an argument for ticker. We're going to have a start and end date that the user can input. And we're going to leverage the open source Yahoo Finance library that we imported. And we'll say ticker start and end, and then we're going to return this data frame because this call is going to return the open, close, high, low, and adjusted close data. So let's go in and say stock data is equal to get Yahoo Finance data, and the ticker, for example, we're going to do Bitcoin BTC-USD. We'll say start. And we're going to do a string form of date. So year, month, day. So we're going to do January 2022, the beginning of the year. And then we will say 2024, February 15th. And then I could just print our data frame, and unexpected keyword start. Let's see why that happened. Return data frame. That's spelled the same. What if I get rid of the, I don't think that should do anything, but let me get rid of the arguments here. Start is not defined. It's because of state. It's because I can't spell, apparently. Okay, so we have ticker, start, and then end. All these are the same, so there's no confusion in the arguments. Now, you might be wondering, why would I create a custom Python function when I could just directly call the Yahoo Finance .download function, right? Doesn't really make sense, right? Why not just call this instead of building this out? So the reason why I did this was to showcase kind of like a small but impactful issue where we have a start date and an end date. However, it's non-inclusive. The end date is non-inclusive. And what I mean by that is, even though I typed in 2024, February 15th as the end date, I'm only receiving February 14th as the end date, even though I typed in the 15th as the end date. So that means the end date is not inclusive. And when I request the data from Yahoo Finance, it spits back the 14th, even though I typed in the 15th as the end date. So for a user experience, I think I'd prefer the user to type in the 15th if they want the 15th. I don't want them as the user to do some date math and have to add in their head. If they want 15th data, they would have to type in, for example, the 16th, right? And then finally they get what they want. So in order to solve this issue for a better, clean user experience, I'm going to leverage the date time imports that we did above. So we're going to use format. Format date is going to equal year, month, and then day. So this basically says that we're going to format dates as a string where we're going to say year, month, day. And then within this get Yahoo Finance data function, we're going to add one day to the end date. How do we do that? First, we'll take the end date, say datetime dot strp time string, time is end, and then what is our format? Format date. Next, we're going to take our end date, say end plus time delta. So from a string type, we converted end to a date type. And now with end date as a date type, we can now toggle with time delta and add a day. Days is equal to 1. Add 1 day to the end date to get desired result. So now we're going to have to convert the end date into a string type. In order to do that, we can just say end dot string time format date, and then this converts back to a string type date. So I did make a video on the date wrangling. If you want to see that video, check it out at Intrendia's YouTube channel, how to get Yahoo Finance data in Python. So we're going to move on. We're going to see this fix in action. So I originally wanted the 15th, but it returned the 14th. So if I can spell correctly, format, there it is. That's the issue. So originally, even though I typed in the 15th, I was getting only the 14th. So now I actually get the 15th. So now that we got that small little error, but it can be impactful. So it's good that we fix it. Now we're going to actually get into the technical analysis stuff. So this is where, using the close date, we're going to calculate a couple EMA lines. We're going to do the EMA 12, EMA 128, and the EMA 200. And we could do this by calling the data frame that we just created, call a new column that we're creating, call it EMA 12, and then say data frame. In this case, it's called stock data. Call it close. That's the column that we're going to reference and then make calculations on. And then I'm going to use the function EWM. This EWN function comes from the pandas library. It stands for Exponential Weighted Moving Average and is used to calculate the EMA, Exponential Moving Average, efficiently in pandas data frame or series objects. And the EWM function is part of pandas time series functionality, and also for convenient computation of the EMA with customizable parameters such as span, alpha, various other options and controls for smoothing behavior. So instead of having to go out and create your own function, your own custom function in Python, we could just leverage what pandas already provides us. So let's go through span. This is the window that we're going to be calculating on, which is 12. And then the minimum period, we could just say 0 for that one. and I'm going to say adjusted as false. Since it's the exponential moving average, we're going to call back the mean function, and then we could copy paste and repeat this line of code right here 2 times over, and then instead of 12 we'll say 128, and then I'll make sure to change the column name to their respective window. So span here will be 200, EMA 200. To ensure that the calculation worked, we could call back the data frame and see that the new columns do exist, and clearly these are smoothed averages, right? Because here we have the actual value and these are trailing values. They're a lot lower than the actual closing value for, in this case, Bitcoin. So now that we have that, we could go into creating buy and sell signal logic. This is the heart of your and our algorithm, where we can create rules to whether or not throw a buy, sell, or hold signal. So we could do this through a for loop, and in order to track these buy and sell signals, we're going to initialize the buy and sell columns, where we're going to say data frame, and we're going to create a new column to store whether or not on this day it was a buy or sell signal. Same thing for the sell signal column. We're going to create a new column named sell signal, initialize it as 0, and then we're going to iterate through the data frame using a for loop. So we're going to say for I in range 1 to the length of the data frame itself. That way we successfully go through each and every day, or in this case row. And then we'll say if the stock data frame, and we're going to look at the EMA 12. Let's say on this very day, represented as I in this for loop, if the EMA 12 is greater than the stock data, EMA 128. So we have this first logic. If the exponential moving average of 12 is greater than the EMA of 128, if that's greater, and if the data frame of EMA 12 of the previous day, so how do I get the previous day? All I would have to do is say I minus 1. So current calculation of I minus 1, that's the previous day. So if the EMA 12 of the previous day was less than or equal to the data frame EMA 128, same thing. I want the previous day, so all I have to do is I minus 1. Okay. So now that we have that, and I'm getting a parentheses that's actually mad at me, so I'm trying to figure out where I went wrong there. Stock data, and it's closed by parentheses, so that's good, right? If parentheses, stock data, blah, 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 closed, and open parentheses, stock data, EMA, blah, blah, blah. Ah, there it is. So I needed a bracket for that. because I'm calling the column first and then I'm calling what row, because we're iterating through all the rows. So now I have if true and true. So what does this mean exactly? I'm saying if the current day, the EMA 12 is greater than the EMA 128. What does that mean? That's essentially the, say, golden cross, where we're saying the most recent and EMA 12 will be more closely correlated to the current price because the window size is much smaller than the 128. So the EMA 12 will react a lot faster compared to our other EMA lines. So if we're seeing that the most recent stock values are higher than a larger EMA window, and we're seeing that the EMA 12 from the previous day close is less than the EMA 128, then that must mean that the EMA 12 passed through the EMA 128 line from above. And that's what this if statement is able to capture. It's able to capture and see that in the previous day, the EMA 12 was below EMA 128, and now today the EMA 12 is now above EMA 128 and causing a golden cross. And if we do see a golden cross, then we could throw a buy signal. So we're going to say stock data in our new column that we just built, buy signal. We're going to say that equals 1. A 1 indicates that, yep, there was a buy signal on that day. So we could actually copy this if statement from above and drop it down below. And instead, we're going to do the exact opposite. So I'm going to say, I'm going to flip the signs over. And what this means is that on the previous day, the EMA was above the EMA 128. EMA 12 was above EMA 128. Current day, EMA 12 is now below EMA 128, which means that we had a bearish cross. The more volatile and closely related to the actual price EMA 12 cut through the larger window of the EMA 128, causing a bearish signal. This is a known as a death cross. So if we see that the EMA 12 cuts through the EMA 128 from above, we will throw out a sell signal. So stock data sell signal on the current day I is equal to 1. Or actually, I'll say it's equal to -1. So that way, if we see a 0, then that just means hold. There's no signal to pop up. And there you go. So I'm going to iterate through the entire data frame. And then next, we're going to actually plot our brand new trading algorithm. So I'm going to say plot. I'm going to call the Matplotlib library that we imported plt.figure. I'm going to make this figure large so that I could actually see what's happening. And then we'll do some lines. This will be our close and EMA lines. So here I'll say plt.plot, and we'll call the data frame .index. This is our dates. The index is the dates, I believe. Yes, dates are the index. And then I will say stock data, our data frame. And I want to map out the close price, label it close price, and I will color this black. So we can repeat this line right here 3 more times. For the EMA 12, I will color it blue. I'm going to call back the appropriate EMA lines respectfully. So 128 and 200. I'll say EMA 128. I'll say EMA 200. For the 200 one, I'll color it green. The 128, I'll color it red. Now we need to showcase our sell signals. So we're going to plot the buy and sell signals. So our buy signals will equal the stock data frame. We're going to call the exact column. So in this case, the buy signals. And we want to watch for when this equals 1. Because again, we denoted that a value of 1 means that there's a buy signal. And then we'll say plot scatter. We'll have our buy signals, dates, buy signals, close. Let me type that again. Buy signals, close. The marker is a right up triangle, and I need a head caret for that. So I could type something like that. And then since these are buy signals, I want it to be a green color. Label is equal to buy signal. And finally, we'll do a size of 100. And you could change these sizes around in case they're too small. And then we can repeat this exact line of code for the sell signals. So I'm going to call it sell signals. And I'm going to reference sell signal. And we'll change those. Since it's a sell, I'm going to color it red instead of buy, call it sell. And we'll keep the size the same. And then finally, we can add up some basic touches like a title. So we could say symbol price with EMA and trading signals. And better yet, we could use fstring to type in exactly what the user inputted. So here we could say something like symbol. We could say BTC USD. That way it's a lot more dynamic on our end. And then I could just type symbol, right? That'll still work. Rerun that, and then iterate through. That way here I could say symbol, and then our plot diagram is a lot more dynamic in that regard. So we'll have an X label. We just call this date. We'll have a Y label, and we'll say stock, or actually, let's make it dynamic. We'll say symbol, because again, you could have stocks, you could have cryptos, ETFs. So we'll say Bitcoin price in this example. plt.legend. Let's have a legend in there, and then we could finally show what we got. And it's going to be mad at me. Value after star must be iterable, blah, blah, blah. All right, because we didn't call what argument we're using. So fig size. I want the fig size to be 20 by 8. And we got more issues. Okay, so we got a chart going, so that's good. Um, has no attribute X label. It's just because I can't spell X label. Okay. So I'm not seeing any sell signals, and that's because I need to make sure, because again, we denoted that a -1 value signals a sell signal. So let's try that again, and there you go. So now we have, no, it's still not the way I want it to be. Instead of a upside triangle for sell signals, we could use a V, and that'll be a downward facing triangle. And now that looks way better. So we have a sell signal up here, which seems to be incorrect. We have a sell signal up here, which is very much correct. Crypto fell from around 47,000 all the way down to 20 here. So this buy signal was very much too early. But this sell signal here, very good. Even if you bought here, you got out of it and you minimize your losses. This buy signal here is pretty good. We see the blue line cross right through the red EMA 128 line there, so that's good. And then Bitcoin has been on a pretty good run ever since the beginning of the year. So you see that reinforcement happen here, where even though there are sell signals, buy signals picked it back up, and crypto's on the rise again. So this is an example of a use case for the EMA. I would think the EMA is more good for, I say more good, it's better for, I think entry points are pretty good, especially when you see strong moves to the upside for a stock and it breaks through long traditional EMAs, long average windows that could signal that there's a lot of volume coming in, more interest into the crypto or stock ETF that you're looking at. Because some of the sell signals are not that great, especially in 2023. You see two sell signals here, which were obviously not the right move to make after 2020 hindsight. But I could see some value in this from a entry standpoint. But regardless of that, let's calculate the actual return of this, right? Because right now we're just seeing a pretty picture. But what are the numbers? What is the percent return, and what is the benchmark, the bought and held strategy? Would buying and holding been way better, or would we have been better off actually listening to this algorithm? So we can do a backtesting algorithm to test whether or not our strategy was either worth it, or perhaps it's just easier and better to buy and hold, right? The traditional approach. So why don't we code that right now? And I will say back testing results. Let me just make that into a markdown. So what do we need first? We need to initialize some variables. So what is the initial investment capital? For this case, let's just say 10,000. And I don't need a comma there. So let's say it's 10,000. The position is 0. What's my capital? Well, my capital is the initial investment value. So I'll tell you what, I'll just call it capital. And then what are we going up against, right? So how are we testing our algorithm to see whether or not it's worth it or not? And that'll be the bought and held strategy. So the bought and held capital is same thing, $10,000. So I'll say bought and held capital is equal to capital. And then the bought and held shares will be the initial capital over stock data at the close of the very first day at 0. Okay, so now we could simulate trading. So we're going to iterate through the data frame again and say for I in range length of the entire data frame, stock data, I will say if stock data, we're going to have a buy signal. And then I need to tell it this is what row or day that we're on. If there's a buy signal of 1, what would I want to do? Well, that indicates that there was a golden cross and I would want to buy the asset. So I'm going to buy $10,000 worth of the asset. So shares to buy will be equal to the capital divided by the stock data close price at the given day that we're on. This division is going to round down so that we see exactly how many shares, whole shares, that we could buy, for example, a stock. Then I will say position. We want to keep track of how many shares or coins that we have. So let's say shares to buy, which is what we just calculated, and we'll store it in the position variable. And then let's say what the capital is. Since we're buying, we're going to actually be minusing out capital since we're using that buying power to purchase shares. So shares to buy, multiply that by the close price of the stock right there. We could say elif, the data frame sell signal. What if on this day there is a -1 in the sell signal column? And that would denote a selling opportunity where the EMA 12 crossed from above the EMA 128 line. So now the EMA 12 is less than the EMA 128. That could be a death cross and could signal a bearish turn for the asset. In that case, we're going to sell all shares or sell all coins. We'll do a capital addition, which is the position times the new closing price of the asset. And now the position is 0 since we sold out of all of our shares or coins. And then we'll update the bought and held strategy. So the bought and held capital let's see how much that is worth now. So the bought and held capital, we'll say bought and held shares, multiply that by stock data, close on the very last day. Or rather, it'll iterate through all the days so that we keep track of it every single day. Then we can calculate the final value for both the bought and held capital and the algorithmic trading approach. So the algorithm final value is equal to capital plus the positions held, which is multiplied by stock data close. Instead of I, since here we're not within the for loop, right? This is the for loop. We're not in the for loop anymore, so we need to now grab the last day. We could just indicate that by -1. And then we want to know what is the bought and held strategy value. So I'll call it final value. And this will be calculated by grabbing what we have here, because this is the bought and held capital. And we just want it for the very last day. So this will update it to the very last day. Then not only do I want to see the dollar figure, but I also want to see the percent as well. See by how much did we beat the benchmark, or by how much did we lag on the benchmark. So how would I do that? I will say algorithm final value. I'll just copy and paste it there, minus the initial capital. So here's the issue, right? Because in the for loop, capital is not worth $10,000 anymore, because the for loop altered the value of capital. So in this case, what I need to do is I need a capital and a initial capital, and I need to keep initial capital at 10,000 and then have capital at 10,000, and then capital changes because capital is going to capture the difference between how much the algorithm made versus how much the algorithm start with. So I'm going to have algorithm final value minus the initial capital, which is $10,000. I could have just said 10,000 here, but to make it more dynamic and code friendly, I'll make a new variable and call it initial capital. And it keeps the value of the initial capital without changing it like capital does. And then I'll say bought and held final percent. And then this is the bought and held final value. Subtract that out by the initial capital over initial capital. That way we could, by percentage, see what the difference is. So now I'm going to print the results, and I'm going to do that by saying the algorithm's final value in dollars is the algorithm final value, and percent-wise, we could say algorithm final percent times 100 and round it by 1. Same thing for the bought and held strategy. Bought and held final value as the dollar figure, and then bought and held final percentage times 100 as the percent value. When I click enter, we will see that the algorithm's final value is basically 0. And I think this is because we are looking for a full value. So I'm curious to see what the value would be if I just did that. Okay, that's fascinating. So, right. Okay. So because our initial value was 10,000, capital was $10,000, obviously Bitcoin is worth way more than $10,000 today. So there's no entry point for it to buy a whole coin. So that was an issue there. So if I change this to this, now we see pretty good results based on this algorithm. And we're seeing 84% versus the bought and held strategy of 8.9%. And that's probably because we bought here, realized that it's a bearish market, sold out of our position, and then the coin tumbled from almost 50,000 at the beginning of the year to 17,000. And then we bought initialized right there, made good gains until 2023 October. It got kind of sideways here for the fall months, and then we got a buy signal that shot up all the way back to $53,000. So I could see that our algorithm is outperforming the benchmark bought and held strategy. For the last 2 years, Bitcoin is up 9%, but with EMA algorithmic trading, you could be up 84%. But of course, it's not 100%, right? Past performance doesn't equal future results. Let's try another stock. Let's try Delta. So you could do fractional trading, and here's a good example, right? That it's not going to be perfect, right? So we see negative 33% on the algorithm's performance, which is not great, when you could have just bought and held it and you'd be up 1.8%. You'd be up almost 2%. So let's see where the algorithm went wrong, right? You could see Delta's pretty sideways almost, right? You're always fluctuating between the $45 and the $30. So you have the EMA 12 make volatile moves just like the stock. And then once you see that stock zip through the EMA, it throws a sell signal sometimes when you should have just held it. So for me in this type of scenario, I would think the buy signals are much better at showcasing entry points, and the sell signals are not so good at showcasing exits. Especially at the beginning of 2023, we see two signals that were not good exit points. Rather, you should have just bought and held it. And then these signals right here are pretty good in terms of entries. This is a great entry coming into the fall months. Delta stock was very strong, going from 35 to 45. Same thing here. You could have bought into Delta and held it until you got to that 45 mark. So you could play around with the asset that you look for. Let's try another one. What's another one that we could do? Apple's a popular stock. Let's look at that one. So here you go. Here's an example where on a popular stock like Apple, you actually have a 1% edge, 1.2% edge on the bought and held strategy. Apple's up 1% in the past 2 years. The algorithm is actually up 2%. So again, the stock is not making any new ground. It's only up 1%. However, this buy signal right here was a great entry point. At the beginning of 2023, we see that rally in Apple stock going up, almost hitting that $3 trillion market cap until we're seeing this sideways market going into 2024. So this is a great entry point. This one here, not so much. We're almost at that peak in 2022 fall months, and then we saw a valley going down. But this signal right here was a very good entry point and probably saved the algorithm and increased the strategy performance a lot right here. So this was a key pivotal moment right there. And then we see another buy signal most recently as of around the beginning of 2024. That's like November 2023 right there. So obviously past performance is not future indicative of future results. And personally, for me, I think a more complex and diverse algorithm, diverse sources of data, diverse sources of technical analysis, fundamental analysis is something that I would prefer. But this EMA algorithm definitely serves as a great entry point into the world of algorithmic trading. So I do hope you enjoyed coding alongside with me. And and found the Python coding tutorial helpful today, you now have a trading algorithm that leverages the Yahoo Finance API through the open source yfinance package, measure technical analysis EMA lines with pandas, and you created logic to help make buying and selling signals. We also created a backtesting algorithm that calculates the sum of dollar final value and percent change in market value for the algorithmic approach and the bought and held approach. Personally, like I said, I would prefer a stronger, more robust algorithm that tracks more data and analysis compared to just EMA. However, again, this EMA algorithm can potentially offer good entry points and serve as a great starting point in creating super cool and effective trading algorithms. I'd love to see what you guys add to this algorithm here, because again, you could just go in right here. This is, or no, that's the plot, excuse me. This is the heart of it, right? You make all your technical analyses up here. Sure, you got EMAs, you could calculate RSI, you could calculate MACD, you could calculate Bollinger Bands, you could calculate probability and statistics in here, all this stuff. And then this is the heart of it, right? This is where your creativity and your drive comes in, and your ability to make logic to predict and assign buy and sell signals. That's where the magic happens. So I'd love to see what you guys come up with, what your turn and takes are on this. And, with this, you could go anywhere, right? So I hope this is a fun video for you guys, an EMA algorithm. For more coding videos, check out the automated Fibonacci retracement tool video and the algorithmic trading course in Python series that I videoed and published on the Intrendia's YouTube channel. So I hope you guys like these Python tutorials, and I'd love to keep making them. It's a great way for me to practice my Python and, keep coding. It's kind of like a language. If you don't use it, you lose it. So happy trading and happy coding, and comment down below what you enjoyed about this video, what you didn't, what I could do better, things like that. Check out Intrendias.com for free buy and sell signals based on 2 powerful trading algorithms, the MIA algorithm and the volume breakout algorithm. The MIA algorithm uses popular technical analysis oscillators like MACD, RSI, EMAs, like we did here, Bollinger Bands, things like that, to output free and simple buy and sell signals. Same thing for the volume breakout algorithm, except the VBA is able to automatically find price, support, and resistance levels along with detecting volume, momentum, and it also does technical analysis on the back end to provide buy and sell signals. So definitely check that out. And happy coding, happy trading. Thank you for watching, and I will see you guys in the next one.